Hi, everybody. Welcome back to Ox Talks. Thanks for watching the show. Please like the videos for me, hit the thumbs up button, share the videos with family, friends, coworkers, colleagues, loved ones, anybody that you can keep helping to wake up as to what's actually happening and unfolding. And please subscribe to the channel if you're not subscribed. Appreciate the support. Well, we had a liquidation, it looks like today, across the board. Stock market fell pretty big as of recording this videos. Cryptos are down pretty big. Gold and silver took a beating today. Let me start with the stock market. And it was the Dow closed down 378 points, just about almost less than 1% off. The S&P fell 108 points. That's 1.86%. And the NASDAQ got just clobbered, fell 512 points, closed just above 18,000, but down 2.75%. You had a corresponding sell-off also in cryptos. Bitcoin is still, as of me checking about half an hour ago, Bitcoin still holding just above 70,000, but it's down $1,600, almost $1,700, 2.3%. Ethereum got clobbered, down 5%, or $140.44. Ether's at $2,520. And XRP is down 2.75%, sitting at 51 cents. Gold and silver, look, I mean, when you have these big sell-offs in the markets, you do a lot of times get the downturn with the metals as well. Gold fell $43.70 an ounce, and silver fell over $1 an ounce. So those are pretty big. Silver fell over 3%, gold about 1.5%. So a lot of liquidation today. You do a lot of times have forced selling of metals to cover margin calls. I saw an article this morning on CNBC saying that that there is the lowest level of mutual fund holdings in a long time, which means that everybody is in the stock market. Everybody is gambling in the markets and riding this wave, which recently, as of recent, appears to only be going in one direction, and that's up. We will see if this continues. Today, the VIX, the volatility index, was up, got up pretty high as well. Let's see if this follows through to tomorrow, okay? There's some more economic data coming out tomorrow morning. Today's data, the markets did not digest real well. So let me talk about some other economic points, data points that I saw today in stories, and that was kind of the reason for the thumbnail about the party is over. Is the party over in the stock market? Is this the beginning of a broader sell-off? We'll have to see. But let me address a story I saw from MSN, from Bloomberg today. And it says MGM resort sales and profit fall short as Las Vegas betting drops, okay? And it says MGM Resorts reported lower than expected sales and profit for the third quarter amid a slowdown in Vegas betting. It says sales rose 5.3% to $4.18 billion. The company said, Wednesday, falling short of analysts' estimates of $4.21 billion. In Las Vegas, where MGM is the largest casino operator, revenue grew 1.3% to $2.13 billion, with higher hotel room sales countering, listen to this, a 13% drop in casino revenue. The Las Vegas Strip has seen 3 straight months of revenue declines. It says largely tied to Baccarat. If you guys understand that analysis, let me know. I know I read something. There was a handful of players that have been taking pretty big winnings recently at Baccarat. Adjusted third quarter earnings came to 54 cents a share, down from a year ago and falling short of the 59-cent average of analysts estimated compiled by Bloomberg. So look at, what does this say? If people put hotels on credit cards, they go in, they pay inflated hotel room rates, and they're not gambling. Okay, so what does that mean? Well, you can't gamble necessarily with a credit card. I guess you can go pull money off your credit line at the window or out of ATMs, but the reality is people are not spending the money, they don't have it. Okay, so again, this is further evidence of this struggling economy. Caesars Entertainment, the entertainment stock tumbled 8%, it said on Wednesday, after reporting lower revenues in Las Vegas and its regional casino business the day before. So that's what's going on with Las Vegas. If you guys are in the area, please leave a comment in terms of what you're seeing in the local economy there. The next story I want to share with you has to do with the 30-year mortgage rates, okay? Because we know that housing in this country, most people are simply priced out of the market, all right? And one of the factors is that the 30-year mortgage, although it's come off of its highs from last year, it's still fairly high by historic standards, okay? This is out of ABC News today. Average rate on 30-year mortgage in the U.S. rises for the 5th straight week. The average rate on 30-year mortgage in the U.S. rose for a 5th straight week, returning to its highest level since early August. The rate rose to 6.72% from 6.54% last week. I checked it a few minutes ago. I saw it at 6.87, okay, darn near close to 7%, but it seems to vary depending on what source you look at. It says the rate rose, according to mortgage buyer Freddie Mac Thursday, the rate rose again to 6.72. It says that's still down from a year ago when the rate averaged 7.76. Borrowing costs on 15-year fixed-rate mortgages, which are popular with homeowners seeking to refinance their home, also increased this week. The average rate rose to 5.99% from 5.71% last week. A year ago, it averaged 7.03%. This is when mortgage rates increase, it can and does add hundreds of dollars a month in costs for borrowers, reducing home buyers' purchasing power at a time when home sales remain near all-time highs, though the housing market is in a sales slump going back to 2022. We've discussed that in videos as recently as last week on the channel. The yield on the 10-year Treasury was 4.30 on the bond market at midday Thursday. I just checked it before I recorded, and I think it finished at 4.28%. It says it was at 3.62% recently in mid-September, just days before the Fed cut its main interest rate by 50 basis points. It says, with several potential inflection points happening over the next week, including the jobs report, the 2024 election, the Federal Reserve interest rate decision, we can expect mortgage rates to remain volatile, said Sam Katter, Freddie Mac's chief economist. He says, although uncertainty will remain, it does appear that mortgage rates are cresting, and we do not expect them to reach the highs that we saw earlier this year. Of course, they're going to say that, right? I wouldn't be surprised if they're much higher this time next year. Economists predict mortgage rates will remain choppy this year, but generally forecast them to ease in 2025. And they said, of course, that should help boost how much home shoppers can afford, but also could lead to higher home prices if more buyers enter the market. Well, for more buyers to enter the market, you have to have sellers willing to reduce their prices. And right now, we don't have that either. And that's why the housing market is simply frozen. I'll leave it there today, just about 8 minutes. I hope you guys are exercising your right to vote, getting out and doing that, and watching what's going on. Today seemed to me to be just maybe a shot across the bow, some uncertainty, some fear creeping in, some economic realities creeping in. So I hope you guys are just paying attention, doing the best that you can to fortify things for you and your family. Keep paying down that debt. Keep getting yourself financially more healthy, because this economic downturn is going to probably continue for the foreseeable future. All right. Appreciate you all again watching and sharing, subscribing. Talk to you soon. Bye.